everyone. This is Clifton Saunders, the Senior Loan Officer with the Clifton Saunders Mortgage Team. Thank you for coming out to my blog today. And today we're going to be discussing what is equity in your home. So, what is equity? Equity is the difference between what your home is worth and the amount that you owe. So a quick example is, say if my house is worth $200,000, but I only owe $100,000, that means my equity is $100,000 in there. And then of course, I'm sure you've heard the term negative equity. Negative equity is where you owe more on a property than what it's worth. An example is, say if my house is worth $200,000, but I owe $210,000, well then I have a $10,000 negative equity spread. Now many people like to know, how do I build the equity in my house? There's two ways that you can build equity in your home. The first way is, of course, is appreciation of value, helping your property values go up in value. Of course, by taking good care of the home, maintaining it, and making sure that you have good features, that's going to bring the value of your house up. Some things you don't have control over, like the market influences and things like that. But of course, the more value your house is worth, the more equity you have. The second one is more in your power. That means reducing the amount of debt that you owe on the house. And that means just by paying additional principal. Most people don't know that if you have a 30-year mortgage and you pay just one extra payment per year, you pay your house off about 9 years faster, and that's building up equity a lot more. So the options is just pay more towards your property every single year, and that's how you build some equity. All right, now the question is, I've got equity in my house, now what can I do with it? There's really three things that you can do with the equity in your home. First off, you can sell the house, take the money and run, and put it in your bank account. As you pay off your property, when you sell it, you get that money back. You kind of realize it at that point. The second thing you can do is, a lot of times second or third time home buyers do, is they come in and they sell that house, and then they turn around and take their big equity spread and they use it as a large down payment to purchase their next house. And what that does is it actually makes their next house a lot more affordable, because now they won't have mortgage insurance. It's a lot lower payment, and in the long run, it's kind of like transferring money from one bank account to the next. So you can use it to upgrade your house and get a better home in the future by doing it properly. And the third one is, say I'm not ready to sell or ready to move, but yet I want to pay off debt. You can actually borrow money against the equity you owe in your house. You come to see a lender like me or another bank, and basically you go to them, and if you have $100,000 in equity from it and you want to borrow, say $50,000 to pull out to go pay off debts, car notes, put your kids through college, whatever it may be, you can actually use the equity for that as well. Thanks again for watching my blog. I hope this content was useful for you too. And if you ever have any questions or concerns, feel free to reach out to me at any time through text, email, or phone number. Give me a call. All my information is in the inbox. Now, if you know any friends or family members you think this information might be useful, please share and forward my information along. We love your referrals. So thanks again for watching our blog, and we look forward to seeing you on our next video.